2021 was an absolutely crazy year in the real estate market. So, can we expect more of the same in 2022? Or are things going to change as we head further into the new year? Hi, this is Andrew with S2 Real Estate Team of eXp Realty. And in today's video, I just kind of wanted to take a look at how we finished up 2021 and share some thoughts with you for what to look for in 2022 and give you an idea of where, at least as of right now, it looks like things are going. Well, in 2021, we kind of had a perfect storm, if you like, through the winter months. And what I mean by that is real estate demand absolutely took off following the pandemic. Now, if you might recall that right as the lockdowns of the pandemic, were starting to be eased, and so many people weren't paying the mortgage, and the economy just completely shut down. Speculation was that real estate was going to crash. It was going to be worse than 2008. There'd be a tsunami of foreclosures again, and everything was just going to implode. And we all know that as of now, that has not happened. In fact, the exact opposite happened. The real estate market, starting in about May, June of 2020, absolutely took off as people's definition of home changed. Demand for real estate went through the roof, coupled with falling mortgage rates. That kind of reached a perfect storm in the winter of 2020, 2021. And by February of 2021, at least here in Frisco, Texas, that's when the crux of it was. That's when we started to see multiple offers and bidding wars and rapidly rising prices that didn't really show any signs of slowing down whatsoever. As a matter of fact, prices rose so quickly that it led to speculation that we were in a bubble. It led to speculation that the market was about to pop. It hasn't. Okay, so what does that mean for us again as we head into 2022? Well, there's two key things that we need to keep our eye on as we go forward. Number one is mortgage rates. The ultra low mortgage rates helped fuel buyer demand and to a certain extent kept home affordability in check. Now, there is some question as to what's going to happen with regards to inflation, as that's running away like crazy right now. But there is one thing I want to point out on inflation. We're going to have to wait and see how all that plays out. But inflation isn't necessarily bad for real estate. And here's what I mean. It can actually add to demand. Now, if you're able to get a fixed rate mortgage, a 30-year fixed rate mortgage at 3.5%, and inflation is running at 6%, okay, the fixed rate mortgage is a hedge against the inflation and actually protects your wealth as the price of the home continues to increase. Well, the second thing that we need to keep an eye on is inventory or supply. Now, basic economics, high demand, low supply, prices go up. That's exactly what we experienced throughout 2021. So I'm going to share my screen with you here. I've got a few slides for you, just kind of run over some of these points and give you an idea on what to keep your eye on as we move forward. So here in this first slide, we're looking at mortgage rates, as I just mentioned. Now, we know that mortgage rates are bound to go up. They've been showing signs of going up. But even as the inflation numbers have been coming out, what's been really interesting is since about the beginning of October, mortgage rates themselves have actually just been moving sideways. They've bounced up and down a little bit, but they're holding steady overall right at about this 3.11% rate. Now, it is widely expected that rates overall for the year are going to increase. The latest projections, which just came out in December of 2021, show where Freddie Mac, Fannie Mae, the Mortgage Bankers Association, and NAR all feel that mortgage rates are going to be. The highest on there is the Mortgage Bankers Association. They're projecting that by the fourth quarter of 22, we could see rates right around 4%. The others aren't quite so high. So when you average all of these out, it looks like the second half of the year, rates should be somewhere between 3.5% to 4%. Historically, that is still an absolutely amazing number. but it's definitely not the 2.65% we saw earlier in 2021. Now, the other aspect that I told you to keep your eye on is inventory, right? So inventory is really key. And the lack of inventory is what has been propelling home prices forward. High demand, low inventory. Well, this right here is from Altos Research. And this is important because if you look, we just set a brand new record for the total number of homes for sale nationally in the first week of January. So 293,673 homes for sale across the country. Here's what's interesting about that. If you go back to, January of 2016, we had right around 1 million homes. So over the last several years, you can see how much the inventory has in fact gone down. So the question is, where is that inventory going to come from, right? Demand seems to be fairly constant right now. Yes, it could change, but supply isn't just going to magically appear. So what we've got here is a couple of different things to look at. Supply can come in the form of new construction, and they're slowly catching up. More homes, new homes, were built in 2021 than in any year since 2006. But it's going to take time to replenish this supply. The one hope was that some of the supply was going to come from foreclosures. Remember, all of those homes that went into forbearance at the outset of the pandemic, it was thought that that would lead to a tsunami of foreclosures. That hasn't happened either. So we can't look there for new inventory to come. The other thing that's been a prevailing sentiment, if you like, of the past decade is that many people who owned, let's say, their first home, traditionally that home would go on the market, they'd sell it, and then use that equity and move up into their next home. Well, more and more over the past few years, those homes have not been coming to market. With interest rates being so low and the amount of equity that people have built, people have been keeping those homes, refinancing them to pull cash out, and turning them into rental properties. They take the cash that they pull out and use that as a down payment on their next home. So the market is absolutely starved of inventory. Point being, if I take a look here at Frisco, Texas, which is where I am right now, you go back to January of 2019, that first week of the month, there were 661 active homes for sale. You fast forward to January 2020, 534. Right? January of 2021, 118. And as of this week, 57. So you can just see that inventory year over year over year continues to fall. So this here, for time's sake, I'm not going to go into all of the different markets. I've put a link to this report in the description of this video below. And if you click on that, at the top of the page, you can search any zip code, any city in the entire country. So you can take a look at what this looks like specific to the area you are most interested in. And here's those forbearance numbers, the foreclosure numbers that I was talking about. Okay, so originally, back in May of 2020, nearly 5 million homes went into forbearance. And as of December, there's now less than 1 million, 0.89. So 890,000 homes remaining in forbearance. That's a lot. I understand that. But the 4 million homes that have come out of forbearance, where are all those foreclosures? Where are all those properties that were supposed to hit the market? They're not coming. There isn't going to be a sudden influx of foreclosures. Okay, that's important to keep in mind. The forbearance program was created specifically to keep people out of foreclosure, and it's worked. Over 75% of the homes that have exited the forbearance program have reached an agreement with the bank. 36% have reached an agreement with the bank, and about 40% have actually paid off the loan, right, or brought it current. So of the remaining homes, they're still being worked out. But the remaining homes here doesn't represent enough to put a massive dent in the supply that we need. Now, as we go forward in 22, here in the first quarter, don't be surprised to start seeing news headlines. Foreclosures are up. Foreclosures are up. There's more foreclosures. Yeah, there was a moratorium in effect. There were virtually no foreclosures last year. Okay, so now that the moratorium has been lifted, some homes are going to get foreclosed on. So year over year, those foreclosure numbers are going to be up. But it's not the massive influx and wave of foreclosures that we were being told to expect. So what does that mean for home prices? Okay, so obviously high demand, low supply, prices are up. Well, going forward in 2022, I do expect that for the first half of the year, we're going to see conditions very similar to what we saw in 2021. It doesn't look as though much is going to change, except the fact that the pace of appreciation has slowed and should continue to slow as we go forward. As a matter of fact, if I look at, again, the Frisco market, and you can look at this for your own market, the pace of appreciation was very rapid between January and April 2021. Believe it or not, between May and September, it was relatively flat, month over month. Year over year, it was still higher, but month over month, after the rapid rise that we saw January through April, May through September, again, we weren't seeing it in the same way. Prices had kind of started to plateau with regards to the new listings. But in September through December, they turned upwards again. That's because unexpectedly demand suddenly increased. I think a lot of that had to do with mortgage rates going up. A lot of buyers that had been waiting, wondering what was going to happen, decided it was time to jump off the fence. And the market got really active and hot again. As a matter of fact, here in Frisco, once again, we are down to a 3-week supply of homes. Okay. 6 months is considered a balanced market, a 6-month supply. And here we are talking about having a 3-week supply. So there's very, very little for sale. Well, this graph you're looking at right here, it's from the National Association of Realtors, and they actually checked with 24 different individuals, different economists, experts on the real estate industry, to give an assessment of where they thought home prices were going to go in 2022. Now, I can tell you a couple of months ago, there was more red on this graph. Okay, so there's still a couple of people that think overall for the year, we're going to see a little bit of a decline in prices. Not a massive crash. There's one person that thinks the prices are going to go down on average about 10%, another 5%. One person thinks we'll stay flat with where we are right now. Everyone else thinks prices are going to go up. And the median increase for everybody, when you average all these together, is 5.7%. This is going to change from market to market, depending on where you are. I can tell you here in Frisco, again, we're still forecasting around 15%, a little bit higher, a little bit lower, depending on who you talk to, price appreciation in 22. And that's, again, going to change from market to market. And finally here, from McClare Bolton Smith. She's the senior leader of research at CoreLogic. And CoreLogic put out a lot of different housing data and are considered the gold standard in many of the reports that are published. And she says, so overall, I do think that 2022 will be another strong year for housing, albeit a little bit higher mortgage rates. And we do think home sales will continue to rise and actually reach a 16-year high in 2022. So as you can see, most of the experts here are still predicting that we're going to have a strong 2022. And I got to admit, all of the leading indicators that I'm looking at right now are showing that the first half of this year, we shouldn't see a drastic change. I agree that the pace of appreciation is going to come down. But if you've been thinking, if you've been sitting out there thinking that, there's a massive adjustment about to happen, there's just no indication that it's going to appear, at least nothing yet. As more information becomes available, I'll be sure to put it out there. And I share this information so that you have the information that you need in order to make the best decision for you and your family, as that's the most important thing. Now, if you have a specific situation or additional questions that you'd like to ask, please feel free to reach out. You can always give us a call at 888-447-9650, or feel free to email us at contact at s2realestateteam.com, and we'll be sure to get back in touch with you.